Most insurance companies waste money on paid ads because they fail to run the numbers beforehand. How much do you spend? How much can you make? What's the cost per lead going to be? In this video, I'm going to explain exactly that by going through the insurance marketing ROI forecasting tool. You can get the link to this, have a play around with it in the link description. To just scroll down, get the link for this and have a play around with it. You can pick from industry, product with inside of that. Now, before we go into actually how to use this calculator, why should you even forecast your results ahead of time if you're running paid ads for an insurance company? So you should be forecasting your results for a number of things. One, you're completely blind at this stage. If you're not forecasting your results ahead of time, you're just hoping, you're just throwing shit at the wall and seeing what sticks. By forecasting your results, it allows you to create a North Star and focus for the whole team. Okay, so you can run benchmarks and understand, for marketing to work, we need to be hitting these numbers. For sales to work, we need to be hitting these numbers. We need to have this system in place to be able to have this follow-up percentage. By knowing this ahead of time, you can create the North Star and hold everyone accountable for that. It also gives you confidence in the number to spend budget. You're not just spending, hoping to see what comes out of the back end of it. If you're spending 5, 10, upwards of 20,000 a month, you need to be able to understand so you can have confidence in the numbers to be able to continue spending that budget. It also gives you the visuals to see how much potential there actually is within this. Okay, so if we're spending 5, 10,000 a month, if we was to spend 15, 20,000 a month, what would that look like for us? And it also allows you to see the impact at each stage of the process and what happens if you have any small leaks in the bucket at the stage of the process. So what is the impact if you have a lower conversion rate to where you think you should have? What is the impact if you have a lower contact rate to where you think? What's the impact if you have a higher cost per lead? We're going to go through exactly that using the insurance marketing ROI forecasting tool. So what do you have here? We have collected data points from all campaigns that we have historically ran, and also multiple independent reference sources to be able to create this calculator for you. So all you have to do is you have to input your monthly ad spend. Okay, so let's just say we're spending £5,000 per month. You can also flick this over into USD and it'll do a currency conversion. So we're just going to run with 5,000 in monthly ad spend. And by the way, this is no guarantee for yourself. Quick disclaimer, this doesn't mean that you're going to run ads and make this sort of money. And it also doesn't mean we're just going to work with you and create this for you off rip. So this is just based on historical campaign performance that we have delivered and also historical data points from multiple different industry sources. If you do want us to run through this with you and we can forecast your results on what we could deliver for you, you can also book that call below. So that being said, it's a 5,000 a month in ad spend. Let's just say we are going to do home insurance and let's just say we are in thatched roof properties. Okay, so what we can then do is we can understand our contact rate. So what is our average contact rate for inbound? Let's just say we're contacting 60% of the inquiries that are coming through. Now, out of that 60%, how many are we closing? So we're generating with about 5,000 ad spend based on historical campaign performance, probably in and around the range around about 222 inquiries. Let's just say we've got a contact rate of around about 60. Now, out of those 60 that we get in contact with, let's just say we're converting, we can be, let's just go with around about 15%. You can be conservative, maybe go down to about 12%. We can be a little bit more ambitious and say closer to around about 20%. So just for now, let's just say we're doing around about a 15% close rate. Now we've got annual commission per policy. So this is going to be what you get as a commission with your administration fee. So this is your earnings per policy. Let's just say for around about this, we're going around about £380. So we've also got a retention scale here. So it compounds on your retention model. So how often are you having a policy stay and stick for? So is it a 1 year retention? Is it 2 years, 3 years, upwards of 5 years retention? Again, this is an approximate based on the retention model with everyone staying that you sign. So you can sort of do the maths and discrepancies between that. So that being said, what do we have here? So with about £5,000 in ad spend, we're generating around about 222 inquiries. Of that, with the conversion rate, we expect to be writing around about 20 new policy sales. So that means our income per month is around about 7,600. Our month one net cash flow, so that's minus the ad spend, is around about 2,600. So as an annual basis, so that's per month, on an annual basis we're looking at that being about 91,200 in total income. Total spend, so it's 5,000 times 12, giving you around about 60,000 in ad spend, so giving you a net annual profit of 31k, and that's just based on 5k spend. Now this obviously is a lifetime value of 380, and you can see how quickly this changes as we increase that that retention scale. So we then go to a 2-year. Okay, so we're spending around about 120,000 on ads, generating about 273,600 in commission, and then leaving us over a 2-year making around about 153,600. And then if you've got a 3-year retention, we're looking at lifetime policy value being about 1,140 per client. So it's just a 380 times 3, and we can see our net profit being about 367,200. So that's giving you an idea of how that works. We can do other industries in here. So life insurance, for example, we've got loads of different stuff that sits within the life insurance. We've got whole life, over 50, specialist life insurance, relevant life, executive income protection, shareholders, a lot of other stuff in here. You've got some PMI as well in here, private medical insurance. We've got a whole range of different stuff from landlords to different type of landlord properties. We've got commercials. This includes couriers, delivery drivers. We've got some commercial motor like fleet HGV. There's some travel, contractors liability, and a whole host of other things. We can also, and what we've put in here for you is created an other. So this is a tier 1 just based on cost per lead. What I will actually have done prior to this video going out is just have this corrected from tier 1 to the actual cost per lead value. So essentially this is like a cost per lead of £10 cost per lead, £20 cost per lead, £30 cost per lead, £40 cost per lead, but it will say that by the time you use this. So you can actually go based on, okay, I might not know exactly, what I'm trying to push, but I know that I have an X cost per lead in mind to see how those metrics work. But just for another example, let's do life insurance. Let's do sort of a general life insurance campaign. Let's really improve this now. So let's just say we've really nailed this in and we're spending £15,000 a month on ads. Let's just say out of them contacts, we're contacting maybe 55. So let's just say our contact rate isn't as good as it can be. We're falling a little bit behind, and we're letting a few things slip just based on the volume that we're getting. And out of those, let's just be conservative and say we're converting around about 12% of those ones that we actually contact. So that being said, we've got average earnings per policy. We can actually be a bit more conservative. Let's just say 10%. Okay, let's just say 10%. And then average earnings per policy. Let's just say we're adding a few add-ons. Maybe we're getting a few of the critical illnesses in there. We're doing some income protection in there as well. And we're boosting our average up to say 1,100. Okay, on a commission basis. So this is on a 1-year retention just because we're getting those sort of commissions up front. We're basically looking at spending 15,000, generating about 710 new inquiries. Of that, call it around about 39 to 40 policies sold. So out of that commission value, we'd expect to generate around about 43,000 in commission, net cash flow being around about 28,000 once you've removed your ad spend. So this over a year is £180,000 spent on ads, around about 516,000 in revenue generated or income and commissions, giving you a net profit of around about 336,000. Now, why is it really important for you to understand these numbers? Well, you can quickly see on the transition on how bad things get as the close rate goes up, as the close rate goes down, as the contact rate is affected. So let's just say this is a 10% close rate. Okay, so this is out of the people that we contact to we close. Let's just say our close rate goes a lot less and we go down to say a 4% close rate. Okay, well, that's really not good at that stage because we're spending nearly 17,000 or we're spending 15,000 ads. We're generating back 17,000 income and only making 2K profit about all of that effort. By the time you've paid your advisors, by the time you've paid for the running costs, you're at a complete negative at that stage. Let's just say you got a close rate of 10% still, but your contact rates are really bad. You're leaving it way too long before you're contacting a lead. You're really not making any effort to even engage with the prospects. You're letting things slip. You're not calling people back. And let's just say you have a contact rate of, 30%. Okay, this is still not terrible because you've got an all right close rate and you've got a really good annual commission size, but as you can see, things really do start to slip. Now this is quite a good example because you have a high commission value, but if we then start to do that something, let's just say we're in HGV space, we're spending around about 12,000 on ads, and let's just say our contact rate is around about 30%, close rate sits at about 10, and we're averaging around about, call it 490 per sale. As you can see quite quickly, by doing that, 480 leads sounds great. Not generating many policies off the back of that. You've spent 12,000 on advertisements and your income has only been 7K. So running this campaign leaves you at 4,900. So a lot of the time it's not to do with the amount that you spend. It's not to do with the cost per lead. It's a lot of these metrics internally, because you can see quite quickly if we boost this up to say 60%, okay, now we're in the green. We boost this up to around about 12. Okay, now we're actually consistently making making a profit here. And if we look at this over a 3-year retention, we're spending around about 432 on ads over 3 years and generating a total income commission size around about 1.2 million, leaving us at around a healthy 700,000 or nearly 800,000 in profit. So as you can see, a really big different impact over when you do play around with these numbers. Have a go with it. There's a whole range of different type of products that you can play around with here and really get a good understanding of, right, okay, what benchmarks do we need to hit to be able to make this a cash flowing machine, and what standards do I need to hold my team to make this a reality? Okay, so these are realistic cost per lead, realistic outcomes based on the product, the spend, and a realistic outcome of the monthly leads that you would actually receive off the back of that. If you've got any questions, feel free to reach out. You can find my LinkedIn. You can book a call with us below if you'd like us to go through this with you, or if you'd like us to forecast your results and realistic outcomes of what we could build a campaign for you. You can find that link below. Hope you found this valuable. Like I said, this is the insurance marketing ROI forecasting tool. You can find that below. Click below, have a play around with it. Like, subscribe, do all that YouTube stuff. Appreciate you watching.